All right, let's talk money or a lack of it, because interest rates are possibly going up this week again. Now, there have been 7 consecutive interest rate hikes in just over a year. The last one we saw was in November, and the prime lending rate currently 10.5%. Higher rates have been used around the world to control rising inflation, but they're putting consumers under pressure, especially here. To discuss, we're joined by economics editor Tshepo Mongoai. Great to have you with us. As always, on a Monday, what are you expecting on Thursday?
Well, if you look at the overall picture, you could say that inflation, it is coming down, but it's still a tale of a mixed bag in a way. There are items that clearly are coming down, especially some of the main drivers. Transport, of course, and food. Those were the 2 main drivers for quite some time. If you look at fuel, for example, since 2001, it's been accumulating at around 20%. So there's been a lot of pressure on that front. But food is not one unit. There are items within food that are clearly coming down. Meat is coming down. Bread and cereal, you could see that it's stubbornly high. It remains high at about 4%. But generally, the trend points to a slowdown. The other point, which for me it's a concern, there is what you call durable goods index that Stats SA conducts. So they actually look at the goods that households purchase more than any other item in the CPI basket. So that remains high at around 11%. So and you look at the last.
What's an example of a durable good?
Well, durable goods, these are food like food stuff that people buy at home.
Long term.
I mean, if you look at the broad basket, it includes a whole lot of things that people will not, utilities that increase once a year. So there are items that a household will not purchase regularly, but there are those, especially in the food basket, that they're obliged to buy all the time. So Stats track those items, and there is an index that they actually put in, and at around 11%, and you look at the last print of December CPI at 7.2%, that tells you that, inflation is still high, especially on items that households are buying quite regularly. But of course, we may see the bank starting to apply its mind and perhaps holding and say, let's see what happened, because we had about 350 basis points, and they're really starting to work their way into the economy, because it takes time for those to hike to start being felt by consumers. So it's only now that consumers are really finding hard. Prices consumers are battling to afford, and obviously the bank is watching the trend very closely to ensure that the default rate doesn't start peaking. And I think that is the main thing that they'll also have to look at. But of course, even their inflation projections, where is the overall inflation going? They'll be concerned with that. And I think once they've consolidated the position on that, we will see the outcome. But I think we may see a smaller increase. Most economists are saying perhaps a 25 basis point or a 50 basis point. There is no an outright position as whether it will be a hold. But with these things, I mean, everything is possible.
Okay, so we're looking at a smaller interest rate hike, because we saw 75 basis points in November, or a halt. You're sitting on the fence.
No, absolutely. I think, as most experts say, it could be either a 50 or a 25 basis point hike. There's probably a lonely voice out there of a hold, that it's out there, but it's in the minority. The majority says definitely a hike. The Reserve Bank, it wants to anchor inflation expectations, to send a message out there to consumers that it's really serious about dealing with inflation, and they're determined to hike whenever they see that there are inflationary pressures in the pipeline, like we see the tariff hike by Eskom. That could also force the hand of the Reserve Bank perhaps to keep it steady on a hike.
And you spoke about fuel, and we know that taxi fares go up, and then it's always said they never come down. So, same with food prices, although we are seeing fluctuations.
Yes, I already indicated that fuel inflation has been rising at around 20% annually.
Sure.
I don't think we have reversed that so far. So that tells you that obviously fuel inflation actually still remains very, very high for many consumers because of the rate that has been increasing. So you probably need time in order to undo that. There are still a lot of inflationary pressures because the increase in prices were quite steady and were happening at bigger numbers and percentages. The unwinding of that, it's happening gradually. So perhaps there is still some pressure.
You spoke before about the increase of 3.5 percentage points. I mean, the repo rate basically doubled in the period of a year, November 2021 to November last year. It's been incredible pain for consumers, and some are predicting that homeowners, the people who have credit, simply cannot withstand another interest rate hike. What do you think?
Yeah, indebtedness among South Africa is extremely high, and it remains very, very high. Obviously, the bank always sent a message that when interest rates are low, try to pay off your debt, so that whenever the cycle moves the opposite, you are in a better position to go through it without necessarily having a lot of depression. But the reality is debt is way too high for many consumers, and every time, even when interest rates move an inch, it actually hurts the ability of many consumers to buy and to purchase certain items, and it's immediate. So of course there are those risks, but the reality is the central bank would not allow the default rate to spike. It is in their best interest. Obviously, the Prudential Authority has some presence in the Monetary Policy Committee, so they will paint a picture of what they are starting to see when it comes to the performance of loans and non-performing loans.
Okay, so somebody's there looking at the ability of people to pay their debt, which is great. Tshepo, before we let you go, I have to throw in a quick question on Eskom, because we had talk from the chair saying maybe we should have stage 2 or 3 permanent load shedding. Eskom saying, okay, that's not really a consideration right now. But uncertainty again, the president also saying maybe we shouldn't do the increase for Eskom, approved by NERSA. Just tell me the impact on the markets today.
It is a bit confusing. If you look at the tone and what the finance minister, Kodongwana, has been saying, he's been talking about this tariff. He's been waiting for this tariff increase in order to conclude his plan to help Eskom. Remember, they're sitting on a debt of around 400 billion rand. They're negotiating with bondholders, and I'm sure they've told bondholders that, look, we are waiting for this NS's decision, and that will help us in order to take that particular debt. Now, when you have the president saying that, look, we're going to delay that, some of the bondholders who've given Eskom money will say, but you, the Minister of Finance, told us that, this NERSA's decision is quite key in terms of the plan that Eskom has. Where does this put us? There's lack of consistency in terms of the message that government is sending out there, and I'm sure it creates a lot of stress and frustration for the finance minister in dealing with the Eskom issue now.
All right, so not great for markets, but you'll follow that throughout the week, and we'll see if we can chat again. We'll certainly bring you that decision by the Monetary Policy Committee of the Reserve Bank on interest rates on Thursday. That was Tshepo Mongoai, SABC News' economics editor.